Hey everyone, I'm Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes here in the Las Vegas Valley. We help people build wealth through real estate. Every month I bring you two different market update videos. One on single family resales around the Las Vegas Valley. That's what this video is. The other on condo and townhome resales around the Las Vegas Valley. Generally, I've been publishing those on the 7th or 8th of each month. I'm going to change that slightly. I will continue to pull the data for all market segments on the 7th of each month. That way they're comparable across time and they're stable relative to trying to pull the data earlier when the data set itself is still under continuous revision in the earliest parts of the month especially. However, I will be releasing the single family market update every month going forward on either the 7th or the 8th, and I will release the condo and townhome market update on the following week on about the 14th of every month. That way it's a little easier in the production process, the editing process. They will be coming out, but it'll be a more regularized schedule instead of slipping everything to try to get stuff out the same day. So you'll see future market updates occurring on the 7th or 8th, and then on about the 14th of each month, you'll see the condo and townhome updates. So just to alert you to that change. Okay, so why do I do these videos? I do these market update videos as well as other videos to make sure that you are informed about what's going on in real estate. Why is that important? Because you are not able to make informed decisions if you don't have information or if you have incorrect information. So these videos stand alone as being accurate and insightful. They are based on real numbers and they use accurate statistical analytical techniques to make sure that you have the best insights possible. And of course, they're supported by me, both in the activities that I do for my existing clients and for activities I do for any new potential clients. So if you have an interest in what I'm saying, if you're interested in talking with me, if you're interested in working with me, please reach out. I'd be happy to help you. Same thing, if you find this information potentially really useful or valuable, share it with your friends, your neighbors, your colleagues. All right. Let's go ahead and get into this month's market update. Now, this is the February update, meaning that I pulled the data on February 7th of 2024. This data looks at the month of January, which is complete, and therefore it's backwards looking for what happened last month. We make comparisons from last month's data to the month prior, so we can get month over month comparisons. So on this video, that's December 23 and January 24. And we also make annual comparisons, so January 23 through January 24, so we can see sort of in a normal seasonal pattern what might be happening winter to winter in this particular video. So with these numbers, I've got some good news. I've got some mixed news, and there's still some challenges in the market. So we've got some problematic news, and we're going to take those in turn. The first that looks a little bit mixed is with regard to pricing. Pricing in January, $440,000. That's a median sold price on single family resale homes in the Las Vegas Valley. $440,000. That is down. It is down $4,000 or 0.1% from what we saw in December. Now, that doesn't mean that prices are going down. Rather, that means that we may actually be hitting a particular point in time where we're going to see some fluctuation for a little while the trend changes from discouraging, at least partly in 2023, although we ended up overall for the year 2023 with a 7.0% increase. I think that we're going to start to see some bigger pickups here, but we have to stabilize where we are. We have to consolidate in the market, and that's what we did in January of 2023. Now, I will comment, this is actually up 5.0% from the $419,000 we were at the end of January 2023. So year over year, up 5%. Now, it's important to recognize where we are, though, in the interest rate cycle, because interest rates are clearly having a very significant impact on what buyers can afford and on how many buyers may be looking at a particular time, how many sellers may be trying to sell at a particular period of time. As I discussed extensively in the 2024 market forecast video that I released in November, and is linked here at the end of this video if you've not already watched that. Now, interest rates had hit their peak in October of 2023, and in November and December, interest rates were coming down. That's on 30-year fixed rate mortgages. They had come down kind of sharply. They had come down over 100 basis points, well over 100 basis points, actually, about 150 basis points. So 1.5% during that November-December timeframe. But I had suggested that we would see in January rates move back up. The reason is not because the Federal Reserve is doing anything new in terms of increasing interest rates, but rather twofold. During the holidays, professional bond traders go out of town. They go out of the country. They stop trading. When they come back, the market usually will bounce the direction opposite of what had been going on in December, as those professional bond traders look to take advantage of those thinly traded weeks in the bond market to capture some of their profits. Now, that definitely happened here. We had one other thing that happened, and that was some very strong economic data with regard to employment levels and unemployment levels. The amount of job growth that we saw in the month of January, backward looking itself, so the month of December, that caused some bond traders to think the Fed is probably going to be holding its high interest rates a little bit longer than they may have otherwise been anticipating. The implication of that was that mortgage interest rates would hold higher for longer. And so we saw rates backtracking and moving up in the month of January. Not a lot, but a little. And we know buyers are very sensitive to interest rates. If a buyer is buying with a mortgage, that impacts the amount that they will actually have to pay monthly for every month that they own the property that they're buying. And so they're very sensitive to that, reasonably. So that actually has pulled some activity out of the market. We'll see that in a minute. But it's meant that we've sort of stabilized on price. Interestingly, we're not going down. So that's good. And I don't think we're going to be going down. Now, my belief about interest rate trends is this. In February, we're going to see the gap between the 10-year Treasury and the 30-year mortgage narrow, as I had alluded to again in the market forecast video that I had done at the end of November. That narrowing means that mortgage interest rates will be coming down through the month of February. That'll continue the month of March. We'll probably see the Federal Reserve make its first cut in the policy rate, not in March, but in April, possibly as late as May. Now, it is interesting right now, all Federal Reserve Board voting members are saying that interest rates, policy rates, will come down in 2024. They're saying there will be 2, 3, or 4 cuts in the policy rate during 2024, depending on which particular Fed governor you're listening to. Interestingly, they've tied these decisions not so much to the strength of the labor market, although that's something that they talk about a lot, but rather to inflation. Inflation continues to run above their 2% goal, which is a stupid goal, as I've said many, many times. But interestingly, 6-month inflation has come down to just below 2%. 9-month inflation has now come down to just below 2%. And so we'll see, certainly by April 12-month inflation coming down, and that's going to cause the Fed to move fairly rapidly. We're not going to see great big decreases in interest rates from the Fed. There'll be 25 basis point decreases when they occur, but we're going to see the Fed starting to react to, we need to do something to make sure the economy is sufficiently stimulated because interest rates have been so restrictive for so long. So that's what's going on with pricing. At the median sale, remember, I look at pricing for single-family homes in an additional way just to see if there's some additional insight we can get out of what's taking place in the market at any particular moment in time. And that is, I look at price per foot. How much did the average home sell for at a per foot basis? Right, so the average per foot, or actually median per foot sale price was $246 per foot. So if you were to multiply that by the size of the median home, you would understand the sale price on that particular home. But that $246 is down $1 or less than 0.1% from $247 in December. It is up 5.1% from the $234 per foot that we saw in January of 2023. Now, that's actually really interesting. That means that our price per foot behaved almost identically. The statistical difference in those numbers from the down 0.1% and the up 5.0% on median sale price is statistically insignificant. So price per foot behaved the same way. What that means is best we can glean from these numbers, the entirety of the market for single family resale homes in the Las Vegas Valley was behaving consistently. The upper end, the lower end, the middle, they were all behaving consistently with each other. And that's great to see. That means that we're not seeing buyers at the lower end of the market being priced out. We're not seeing buyers at the upper end of the market sitting on their hands out of a great deal of concern. We're actually seeing that the whole market is behaving very consistently. So great news. Okay, so that's what's going on with price. At the median sale price, down 0.1%, up 5% year over year. At the median price per foot, down less than 0.1%, month over month, and up 5.1% year over year. But what's going on with the internals of the market, meaning with supply and demand, as we think about the market space? Well, this is where news gets a little interesting. So the number of sold units were up and the number of pending sales up considerably. So let's look at these particular numbers. Sold 1,298, that's up 0.1%, so very little, from 1,288. It's up 10 units during the course of January relative to December. So that's flat. It's up slightly, it's flat. That's not bad, especially because interest rates were going higher. But I will point out, of course, December is always the slowest month of the year, and we were at really low numbers actually throughout 2023. We were at incredibly low numbers for December. So we have seen January as sort of a month of stability at a very low level. We're not falling further in terms of the apparent demand. We are actually up 11.1% from the lowest point that we saw in volume across the past almost 20 years, from 1,168 in January of 2023. So quite low volume. But the other measure of demand is pending. That's the number of contracts that have been written. A buyer steps forward, says, I like your property, I want to put in an offer. They do. Seller and buyer negotiate, they get into contract. The contract is open, the escrow is open, it's not yet closed. So this is forward-looking data, what we expect to see going forward, because pending contracts ideally close the following month. So pending contracts written in January 2024 for resale single family, 1,823. That is up. It's up a very strong 42.2% from 1,282 in December. So that's actually really good news. It is up 9.0% from the 1,673 a year prior. Now, we expect to see pending contracts going up throughout the time frame January through June. So this is good news. We are going up, but this increase is actually higher than we may have expected with normal seasonal patterns. It's definitely higher than we may have expected with interest rates literally going higher. And by the way, for almost all resale transactions, buyer locks interest rate within a couple of days of going into contract. So these contracts were being written knowing that interest rates charged on these contracts were going higher, not a huge amount, but up about 50 basis points during the course of the month, higher than they would have been if they had been written in the month of December. So this is a good statement about demand in the marketplace. Is we see actual closed sales going up, we see pending contracts going up and going up actually really strongly. Well, there's another side of the market. The other side of the market is supply. And the news on supply is a little more mixed. It's a little problematic, continues to be problematic. So what does that look like? Well, inventory, the number of listings that are actually in the multiple listing service for sale, inventory 3,512 in the month of, ending the month of January 2024. That number is down 10% from 3,904 at the end of 2023. So that's a problem, is we already had incredibly tight inventory, and we actually have come down on standing inventory in the marketplace. Now that number is down, we know, very substantially from a year prior, because we know the inventory had gotten more normal during the course of the second half of 2022. And so in the first portion of 2023, and we've been eating through inventory actually since October of 2022. We peaked on inventory in September 2022. Well, we had 6,955 standing inventory for sale homes, resale, listed at the end of January of 2023. We're down 49.8% from that number, virtually 50% from that number. Now, where does this stand sort of compared to normal? Normal, we would expect to see during any particular month about 10,000 single family resales listed for sale, meaning standing inventory. We're at a third of that. We're at 3,512 at the end of January. Now, the good news is we actually did pick up new listings. New listings went up, and they went up fairly substantially. This is good. It's seasonally appropriate. We saw 2,268 new listings by the end of January of 2024. This was up from 1,375 in December 2023. Remember, December is always the weakest month of the year. January, we tend to see a bit of a surge, and that surge continues in a normal year throughout the latter part of the winter and all of the spring. Now, that's the normal seasonal pattern with new listings. We've not seen that hit into inventory yet. I mention it's a normal seasonal pattern because last year, a lot of the agents who have a great deal of experience were expecting to see normal seasonal patterns and were suggesting, oh, inventory is going to be going back up through the winter and the spring. It did not happen. It did not materialize. In the market forecast video I did, I suggested, where I had said in 2023 that would not be the case, and I called that correctly. I suggested this year we will start to return to more seasonal patterns because we'll see interest rates coming down, which is freeing buyers to make decisions, which is removing some of the fear that sellers have about their properties languishing on the market and fear about how expensive it's going to be for them to get into their replacement property. So we've actually seen this start in January. We're up, like I said, 900 approximately new listings from the month prior. We're up 64.5%. So it's a solid rebound. We're up 40.0% from 1,632 newly listed resale homes that we saw in January of 2023. So that suggests we may start to see a turn in inventory in February. Inventory has been so challenged for so long, it's hard to really say with a definitive outlook that that's going to occur, but these new listing numbers are definitely really encouraging. And inventory overall is just so low that we're going to have to see a bottom in inventory somewhere. Some people need to sell, and those are the people who are selling right now. Now, I want to make one other comment that I don't usually talk about, but that is with regard to a particular portion of the market. One of my clients called me up the other day, and they asked me about a particular house that was listed for just under $300,000. They were thinking about making an investment nearby to a house they had previously bought. And so I looked, that house had already gone into contract very, very quickly with multiple offers, but I decided to look specifically to see how many single family resale homes were listed for $300,000 and below. It's kind of interesting information, and so I want to present it to you here. There were 87 houses, and this is last week, so this is maybe about the 2nd of February that I did this research. There were 87 single-family resale homes listed for $300,000 and below across the entire multiple listing service. Now, that includes towns like Eureka and Moab and Mesquite and Pahrump and Searchlight. Right? That's a very broad area. Narrowing that down to just the Las Vegas Valley, 100% of the Las Vegas Valley, from Sky Canyon in the north to Boulder City in the south, from Mountain's Edge and Southern Highlands in the south, west up to Nellis and the Apex area in the northeast. 25. There are only 25 single-family homes listed for $300,000 and below. So it gives you an idea of where the bottom of pricing is in this market. If you're looking for a single family home and you're thinking you're going to be below $300,000, you're probably not. And who's buying those homes generally? Flippers, because they can get in inexpensively, they can do some rehabilitation, and they can put them back on the market closer to the median sale price of $440,000. So very unlikely you're going to find a house that you could actually buy for $300,000. Now, looking at those 25, though, did uncover some interesting information. One of them has been on the market for 11 months at under $300,000, where there's only 25. There's only 24 competitors. Why is that? I don't know. I can't talk to the specific house. I've not gone and looked at it. Some of the stuff that's listed at that price range, they look like storage sheds. Some of the stuff that's listed at that price range, one of them, extensive fire damage on a property in the northeast part of the valley. The outside of the property looked pretty nice. It did not look like it should be priced that way, but the entire inside was devastated from fire damage. So there's a variety of reasons why these properties come up at these price points. Generally speaking, you should be thinking, if you're in the market for a single family home in the Las Vegas Valley right now, $300,000 is your absolute floor. And then you're looking obviously at prices that go up from there. Okay, the one other item I want to talk about that I've been addressing for the past few years now is back on market. 634 escrows failed during the course of January 2024. That means 634 contracts on a house fell out during that month. That is 32.8% of all of the contracts that were written. So this back on market number continues to be extremely elevated. Normally we see back on markets occurring. It's sort of that 10 to 12% range, sometimes slightly higher, up to about 15%. But if we think of back on market normally in 10 to 12%, at 32.8%, we're talking almost a third of properties going back into the market. The contract is failing. Why is that? A variety of reasons. Make sure when you're talking to an agent, they understand what's going on. They should be able to explain to you what's driving these back on market numbers and how you can protect yourself from these back on market numbers. So if you get into contract as a buyer and you drop out, there may be legitimate reasons, but it means you've got to start all over. If you're a seller and your contract falls apart, you've been significantly inconvenienced by this, right? You took your property off the market because it was in contract. Now you got to go back on and start all over. So pay attention to this and make sure your real estate agent's paying attention to this. We know how to protect our clients on both the buy side and the sell side with regard to these back on market problems that are arising, and we protect virtually 100% of our clients from these problems. Sometimes something takes place that you're not able to deal with, such as buyer losing a job. But generally speaking, we're able to solidify the contracts to make sure that we've pre-negotiated what may take place if something problematic occurs. Okay, so I am Justin Miller with the Chong Miller Group. We help people buy and sell homes. We help people build wealth through real estate. Please smash the like button, subscribe if you've not already, share these videos. And if you have any comments, please add comments. I'd be happy to answer those. And please reach out if you have any specific questions. Be happy to talk with you. Thank you very much. I'll see you in the next video.